Yeah. Okay. So I know it's been a long day for everybody. I want to say thanks for hanging in there. And Kevin, great presentation. You hit on a lot of really important key notes. So very happy to follow you. So we'll make this short and sweet and to the point. I think Kevin's filled in a couple things that I'll touch base on as well. But I want to, something he said that I think is really important, which we'll go over, is about bringing choices to the employers. And just really, being that consultant for them and giving them options and not just one thing, because LifeSecure only has the standalone long-term care, but some people want that. I love all the products. When I sold long-term care insurance, I sold both the combination and the standalone. So I think to be successful in this industry, I believe you need to have all the tools in your tool belt. So being open-minded and thinking of all the different things you have to offer is the way to go. So I'm going to go quickly through the LifeSecure stuff. And Kevin, I cannot believe you finished early, but it was a good thing because it took me that long to get it working here. So the first thing, we'll put it in a slide mode here so you can see it better. So when you look at long-term care from LifeSecure, we have made this very simple for the work site. So when we started out, we just were always a little different than the other carriers in the standalone long-term care space. So there's not a lot of choices to get people confused and like nervous, because I think the one thing, a long time ago when there was 20 long-term care standalone carriers, there were so many choices that the choice was the people couldn't make a choice. So we wanted to create a product that would limit choices for everyone. So you could just pick like A, B, C, or D. So when you look at LifeSecure's product, you see we have the $50,000 benefit bank, $100,000, a $200,000, or a $300,000. So there's not a lot of choices that you have to put in front of someone in the employer space. And for those of you on the phone, I'm going to back up 1 second. We only sell in the worksite space. And I got ahead of myself here because of my internet issues here. For those of you who don't know who LifeSecure is, I should not assume that you do. We started in 2006, and our parent company is Blue Cross Blue Shield of Michigan, and they wanted to create a product for people across the country. So we're not in Florida, we're not in Florida, California, or New York, but we wanted to have a product that was there to really kind of help people fill that need and fill that gap. And it works well along. I know on this call, a lot of on here are long-term care specialists. This also works well in helping all your products stick that you sell to a customer. So it's a proven fact, they call it the stickiness factor. The more things you can get a customer to buy from you, the less likely they are to leave you. So I wanted to add that in up front before I got to this slide, but I did it a little bit backwards, but that's okay. So here's our benefit banks, the 50, 100,000, 200,000, 300,000. We also have a 30% cash alternative. So if they've got the cash alternative, you can see here, the 300,000, the 600, 1,200, and 1,800, and we can send this slide out afterwards. The issue ages on our products are 18 to 69, guaranteed renewable for life, as long as people are paying their premium, guaranteed renewable. Kevin brought this up, so he kind of did some of my slide and didn't even know it. Maybe he used some of my numbers. So this just gives you an example, like if you had a 50-year-old in the work site and they bought a $50,000 benefit bank, you're at $36 a month. They bought 100,000, it's 58, 200,000, 106, 300,000, 155. So you can see it's very affordable in this age group. Something else that Kevin did bring up, which I think he's really spot on, when you're looking at big groups, we do this when you bring a case to us. We look at it and we say, okay, we only really look at, even though you can offer it to everybody, we kind of figure out, what do you think you're going to get out of that case? Like, is it going to be worth your while, right? This is something you'd look at as an agent or an agency. And using that 40, between the ages of 40 and 60, making over 70,000, doesn't mean someone else might not buy, but that's really your demographics of who's going to, start looking into long-term care insurance. So just a sample of some prices. It's kind of simple. So I want to talk a little bit about our group sizes. So our minimum group size, we go down to 10 lives. And as Kevin mentioned earlier, we have our own portal that you log into. You take the app right online. We also set up self-serve portals where you could actually go out and do an education webinar, either in front of a company or online. You can do a webinar, and then you can direct people to a self-serve, and they self-enroll and buy a product based on your recommendations. But we do find if you can assist people in some way, you're probably going to get a bigger participation out of that group. And Kevin, I'll say that one you did with 21 or 22% participation, that was amazing. That's awesome. You guys did some good work on that. So our group size minimum is 10 eligible employees. And for the 10 eligible employees, we are looking to get a total of 10 applications. So that's on all groups. But out of these 10 apps on this minimum, let's say you have an employer group of 10 employees. If only 5 employees bought and 5 spouses bought, or significant others, that's still 10 applications. So we do require a minimum of 10 applications right here for simplified issue. Okay, so our simplified issue app, long-term care product, when you submit an application with us, everything is done online. We do not take paper applications. So this way, everything hits our system faster, and the underwriting starts once that app gets in the system. So our average turnaround time is about 7 to 10 business days for simplified issue, which means we're going to get that underwritten more quickly. Customer's not going to forget what they purchased, and you're going to get paid faster because we pay commissions on a weekly basis. So in the groups 10 to 99 employees, we do require employer contribution. So in this situation with employer contribution, you would have to set up a list bill, which we have a list bill. But if it's over 100, it can be completely voluntary, and it can be list bill. But we also do, like Kevin mentioned earlier, you're going to hear me say Kevin all the time because I just got done listening to his presentation. We do the EFT from the checking account, or we do a credit card. We have done studies at LifeSecure, and the payment mode that sticks the most is the EFT from the credit card or the checking account, because nothing ever changes. We get that set up, and it just keeps drafting every month after month after month. If you do a credit card, that's the second best way, and we do offer that mode as well. But when that credit card, like if it gets lost or stolen and they get a new credit card, then they're going to get a letter from us, because when we go to draft from that credit card, it won't hit. So, and as of January, well, it's probably February, we're doing away with direct bills for all of our products. So there will be no more paper bills mailed out, because everything we basically do is the EFT or credit card or a list bill, period. But as far as if somebody said, mail me my monthly bill in the mail, we would not be doing that after the first of the year. So Kevin's right on with what he said, and I'm sure I didn't get to hear everybody's presentation today, but I'm sure other people said some of the same stuff. So one thing I do want to point out, for full underwriting on a worksite case, you could say, well, I have an employer group of, just giving you an example, of 8 people, and I really like to set this up. So as long as we'll take a minimum of 5 applications, but it would just be full underwriting, and you could still set up an employer group. You could set this up even if you had a 12-person group, but you feel like you might not get your 10 applications, then don't, and we'll help you with this. Don't go in and start out with a simplified issue thing. Just set that group up if it's too small for the full underwriting. So we'll set it up behind the scenes, and when they get their app, they'll just get a fully underwritten app instead of a simplified issue app. And then you can, that group can still move forward. And the difference in our simplified issue versus full underwriting, there's only 2 more questions, and they're really short and sweet. I want to say one is like, you know, do you use medical marijuana? And there's another one around a drug use. So very minimal difference on the fully underwritten app. But we all know we love to offer that simplified issue because that's a great selling point. So Kevin brought up something earlier that I was going to touch base on, something that we're doing at LifeSecure. We will do exactly what Kevin just said, where he's going in and, you know, you're going in on you're consulting the employer group. Like, what are you looking for your employees? Is it the combination product? Is it GTL? Is it, you know, what are you looking for? Sometimes they want both, right? Like Kevin said, we do recommend that you're probably going to get a better enrollment by offering one first and then the other. So if they already have a robust life insurance, they might just want that traditional long-term care. So, or they might say, well, we'd like to offer traditional long-term care first, and then maybe next year, like Kevin said, he's pre-setting himself up to go back next year to have another full enrollment. So some of the people that didn't maybe even buy the other product, say the combo product the first year, they might buy this traditional the second year. So we will take cases as long as they're big enough. If they're like a 20-person case, probably a little different story, just call and talk with us. But we will allow you to offer both products at the same time. So if you wanted to offer a combination product and basic long-term care at the same enrollment, you can do that, and we have no problem with that. So, or if you go back and you say, hey, I'm going to do this year and that the next year, that's okay too. So I think it's just become a smart way to do business. So just wanted to bring that up and put that out there. In the worksite space, when you're looking at the spousal discount, so if a significant other or a spouse applies at the same time with the employee, there's a 10% discount, which is great. And then if the employer does decide to do an employer contribution, which could be a defined benefit bank, like I showed on that first screen, the 50,000, the 100,000, the 200, or the 300. So let's say we're offered a 50,000, or they can offer a defined dollar amount. And I believe our lowest amount they can go is $25. The employee gets a 5% discount. So if they had a significant other, partner, spouse, whatever, they're going to get a 10% discount to apply together. And if the employer does contribute, it's 5%. But keep this in mind when you're selling. And I think this was brought up as well. I could have just given my presentation to Kevin and let him blend it in with his, and there we go. But keep this in mind. Sometimes employers might only have so many payroll slots for list bill. So don't get discouraged if you don't get employer contribution. You might get a better participation if you can get that. But sometimes employers don't want to just, maybe they do have an extra slot for payroll, but they don't want to deal with it. So make sure, we have a lot of our larger MGAs that they just go in and offer that EFT like right up front. They don't even mess with list billing. However, with that said, we have a fantastic list billing system. We have a fantastic list billing department, and like all of our processes run very, very smoothly. There's not going to be hiccups. So everything runs on a smooth basis. It just depends on what you are looking to do and what your employer is looking to do that you're working with. So I want to talk a little bit about the benefit payout structure. So our policies are a reimbursement policy, just like basic traditional long-term care. Covers you everywhere you're at: home care, assisted adult daycare, nursing home, hospice, or you can pick that cash alternative, which is that 30% of whatever benefit bank they picked for the monthly benefit. If obviously, just like before and always, if they buy an inflation option and the policy grows, that's always 30% of whatever the monthly benefit is at the time of claim. So, and the claimant, we get asked this a lot, like, well, what if they want to use the reimbursement method and then next month they want to use the cash alternative method? The claimant can choose this approach on a monthly basis. So how they prefer to get paid is how we will work with them. Okay, so I want to talk about some other standard features that are in our policy. So coverage for services to live more securely at home, that's pretty common. Everybody knows that. We do the up to 1 month benefit over the life of the policy for just different home modifications, different devices, medical equipment. Very common, nothing out of the ordinary. That's a common factor there, but just want to let you know it is built in the product. And then one thing that's a little different with us, so we have a standard 90-day calendar wait. So everybody knows what that means. As soon as someone goes on claim, they see the doctor, they see someone the first day, they start hiring people to come in, the clock starts ticking and it counts down. You don't have to receive care every day. But we also have a 0-day built-in option. It's just if someone has a suddenly, like an accidental injury or stroke. So something severe happens, like boom, out of the blue, just like that, we give you a 0-day elimination. You do not have to wait the 90 calendar days. And of course, when you're on claim, we do waive premiums. That's very common in the industry. So we offer the basic inflation riders, 1%, 3%, 5%. So we did the 1% just because it's what everybody needs out there in this industry, and it does align in most states with the process where they can, protect their assets against losing all their benefits and still ending up in a Medicaid facility. So, and of course, non-forfeiture benefit rider is there. I'm not going to bore you guys to death because I'm going to get to the other slide. Simplified issue. So simplified issue is for ages 18 to 64 during the open enrollment and the new hire window. So when you see this, the new hire window, generally it's 90 days from when someone's hired. However, I do want to point out, some employers want to say, okay, we're going to hire you today on October 31st, but we don't give people the opportunity to enroll for long-term care until, say, 6 months after they're hired. So when they fill in their application online, there's going to be a box for an eligibility date. So whatever eligibility date they type in that application per their employer's request. So if it's 6 months from today, what would that be? That would be November, December, January, February, March, April. So if they typed in April 31st as an example, our system would automatically, that's their eligibility date, the system would automatically give them a simplified issue application. And the reason we do it this way is because sometimes when someone's hired into a company, there's so much to learn when they just first get hired in that first 90 days, and they, are worried about their dental, their vision, that sort of stuff, and they don't have time to think about long-term care. So you as an agent or an agency, if you're talking to an employer group, you could even make that as a suggestion for long-term care for new hires. Don't give them that eligibility period until 6 months after they're hired, or whatever it is. It could be 3 months, 6 months, or whatever. That would give you time to schedule regularly set meetings to go back to that employer group to hit the new hires, because in the first 90 days, they're very busy with other stuff. So 18 to 64 spouses, or significant others, 18 to 49 during the open enrollment or that new hire window. We call it a new hire window, but it's really an eligibility window, and we probably should change the verbiage on that. There is some additional underwriting. We won't get into all this. We can send this slide deck out for different ages. It's also in our underwriting guide. If you're an agent with us, you can log in and get all that information, but this can be sent out. And we also have a team that can support you and answer any questions that you have as well. So things to remember about LifeSecure. 4 easy straight plan choices. We've got the 1% inflation compound rider that's needed for the partnership plans in all the different states. You've got the cash alternative, the waiver of benefit, but the big thing is that 0 day if there's a sudden accidental injury or a stroke, basic home modifications, simplified issue, 5% employer contribution, fast underwriting, claims paid, all the things we covered. So pretty straightforward, pretty simple, pretty easy. If anyone on this call has been selling long-term care for a long time, this is a no-brainer for you. If there's someone on this call that doesn't really specialize in long-term care and you sell other types of products, there's been great people on this call you can reach out to, or to NAIFA, and they'll connect you with a long-term care agency that specializes in long-term care. Because sometimes we find if there's someone that really hasn't sold long-term care, you might think, well, I don't want to split any commissions because I want to get it all, right? But what we find is that if you don't really understand it, sometimes, even if it's your first couple of cases, it's a benefit to work with somebody that really understands this, because it is a little bit different of a beast. It's more of an educational sale, I'll say, to work with someone that knows what they're doing. And then once you get your sea legs under you, you can take off and do it on your own. So whatever works for you, but just a little tip there. So I want to talk a little bit about this slide, ABCs of selling. So, used to be always be closing, ABC, or always bring choices. And I think what I've heard on some of the calls today, and what we believe, is always bring the choices. So don't always assume everybody wants traditional long-term care, or if they want the combination product. We tend to put what we like onto people And that doesn't always work. And sometimes we don't get the sale because of that. So always bring choices to people, be it a combo product, be it traditional, or perhaps it's even something different. Maybe you have someone that just long-term care doesn't even fit for them at all. So remember that, and I'll show you this on the next slide. So here's a little thing I'm going to leave you guys with before I have like one more slide left, so don't fall asleep on me. It is unethical to sell someone a product they don't need. But remember, it is also unethical to not sell someone a product they do need. So this is where bringing choices and educating is critical in today's society, because if you're not educating someone on something, I can guarantee you this, they're getting the education somewhere else, and it could be online, not from a professional like yourself, and they could be getting led in the wrong direction. So treat your clients like you would your family and educate them on what it is they really need. So with that said, I wanted to bring this slide up to say, at Life Secure, not do we just do long-term care, we also have the accident insurance, we have critical illness, and hospital indemnity. So you might find someone doesn't qualify for a traditional long-term care product and they want to look at our critical illness product. Or maybe they're just don't want any of that at all and you want to look at an accident product. Our accident product is our second to none in the industry. We pay on the client's schedule of benefits. So the EOB, sorry, not a schedule of benefits, they pay off the EOB, so right off of their medical bill that they get from the hospital if they have any type of an injury. It pays off of that, which is very unique in the industry. Most companies pay off of a schedule of benefit. And when I say that, that just means if you broke your arm, one of the carriers out there just might say, well, we give you $100. We actually look at your actual bill, and that's what we pay off. So our accident product is second to none out there. It's it's very awesome. Critical illness is also great. You got lump sum cash benefits. Your hospital indemnity, we just refreshed our hospital indemnity, so that's if someone's in the hospital. So remember this, I know we all sell long-term care, but I'm sure there's some people on here that sell medical insurance, different insurances, or you just sell ancillary type products. These products are worth taking a look at and adding to your portfolio. In fact, if I could, but I can't, I was a long-term care agent for over 20 years. If I could, I would go back to all of my clients. I would send them a letter in the mail and say, hey, I've picked up a new product called accident insurance, and I think this might be something you want to look at. This product with Life Secure is a guaranteed issue product for issue ages up to 74. So they fill out their app and it generates overnight and issues overnight. We don't even touch it. It just comes in the system. It's an auto-generated overnight policy. So great way to throw a little extra cash in your pocket, but more importantly, it's about doing the right thing for the client and asking questions. So everybody you're selling long-term care insurance to probably all has some form of a medical plan, be it an independent one, under 65, over 65, Medicare, whatever it is. They are all buying these products to fill in the gaps for their deductibles on their health insurance. So something to keep in mind if you're looking to maybe add to your current business that you do. Just wanted to put that out there. And all of our stuff that we do, from long-term care to the accident to critical illness, hospital indemnity, is all done in-house. Our customer service, our policyholder services, our claims, everything we do is in-house. And when you need something, we have a full team out in the field, regional sales consultants, and we have internal teams that will answer your questions. So you'll actually get to know the person you're dealing with, and you're not just calling into an empty call center where you're not going to know who you're talking with. So that is it for me. I wanted to keep it short and sweet. This is just a link on here. If Carol or her team sends this out, you guys can click on these different links and you can get these sheets that are kind of the most used sheets. So with that said,